If you're watching this, I assume you don't want your tax return audited. In fact, none of us do. But if you claim these particular items, your risk of failing an audit dramatically increases. The first one is motor vehicle expenses when you have a novated lease. If you have a novated lease, this is being deducted from your income pre-tax. Therefore, you can't claim anything to do with your motor vehicle expenses that are under this novated lease. Now, the ATO are very strict on this area and they have great data tracking to catch you out on this. Because as an agent, for instance, we see a flag on a return that says your client has a novated lease, therefore they can't claim car deductions for this vehicle. So the ATO would know if you've got a novated lease, and if you claim motor vehicle expenses and it's for that car, you're likely going to get audited pretty quickly because it's going to be a simple data matching thing. And that's the trick with all of these things. Anything that's going to be automatically picked up by data matching and you do wrong is massively going to increase your risk of getting an audit and failing that audit. The next one is study costs that aren't related to your employment. So you can only claim study costs if they are directly related to your income earning activities. And this is another area that ATO are very strict on. So there is a strict definition of what's claimable and what's not. And this means that, for instance, if you're working a part-time job as a cook at KFC and you're studying teaching, you aren't able to claim anything to do with that teaching degree because that is not related to your employment activity. Now, this might be different. Maybe you're employed as a bookkeeper and you're paying for a course to upskill yourself in bookkeeping. Then yes, this is going to be directly related to your employment activity and therefore claimable. But you need to make sure you get this right. And that's just the first box you need to tick off. Once you tick off that, then you need to work out what is actually claimable. You need to have spent the money. And obviously, if there's any private portion, maybe you've bought a laptop, but you're using it a little bit for study and a little bit for a private portion, then you need to make sure you're apportioning that correctly. Your occupation code you use in your return is really important here because the ATO will look at that occupation code and who else in that occupation claims study costs. If you're, for instance, a retail assistant, it's probably going to be unlikely you're going to have much study costs. So if you've got a really high claim, that's where the ATO might go, hang on, are you claiming for an unrelated course? Maybe if you're in a field where it's very known that you do a lot of further study, then maybe it's more likely that you're going to have a higher claim. This isn't always the case, and obviously it comes down to your individual situation, but understanding some of the benchmarking and what others in your industry are claiming can help give you a better idea of is this going to flag to the ATO. The next one is super contributions, and you really need to understand what is claimable and what isn't. So when I'm talking about super contributions, what is claimable is additional concessional contributions. So you can't claim for what your employer puts in. This is already factored in, so you can't claim for that. If you're doing salary sacrifice directly through your employer, again, you don't claim anything in your tax return because this is already factored in. All you can claim is if you've made an additional super contribution and you've filled out a notice of intent to claim form. So as you'll see here, this is what a notice of intent to claim form looks like. If you go to your super fund, they might have an already kind of pre-filled out template. But you need to give this to your super fund. This lets your super fund know, I want to claim this as a tax deduction. They will then make sure it's treated as a concessional contribution in your super fund. It'll be taxed in your super fund at 15%, and you'll now be able to claim it in your tax return. You need to wait till you get a letter back from your super fund that acknowledges this and says, yes, that is how it's going to be treated. Only then can you claim it in your tax return. Now, as a tax agent, we see on a client's report that says, yes, they've made a contribution and a notice of intent to claim form has been filled out. It pre-fills into the return as a deduction. So until that is happening, you can't claim it. You need to make sure that paperwork is done before you lodge your tax return. And this is really important that you get this right. You also need to be really careful if you're rolling funds out of that fund, for instance, and switching to another super fund, that you fill this out first. I've seen people do this wrong in the wrong order and cost themselves tens of thousands of dollars. Now, before I get into the next one, I want to make sure that you are subscribed to my free email newsletter. I drop tax tips every single week throughout the whole year, giving you better understanding of how the system works and how you can make sure you're maximizing your overall tax position. I'd love to see you over there, but for now, let's jump back into the video. The next one is one that I think is going to catch a lot of people out, and it's claiming home office expenses that you've already claimed as a part of the fixed rate method. So if you're using the fixed rate method, this has inclusions already. So it includes your phone data, your internet, and it includes your energy, electricity, and gas expenses. So you can't claim these separately if you're already using the fixed rate method. It also includes stationery and consumables, printer, etc. So you really need to understand what is included and what isn't, and make sure you're not doubling up. Because this will be a very easy way for the ATO to pick you up under an audit, because if they see fixed rate and then they see those other expenses, straight away they know your return is wrong. And the sad part is I've seen other agents do this for their clients, and then the clients come to me the next year and I say, you can't do that, and that is going to be an issue. And it's just so easy for the ATO to pick you up because they straight away go, no, you can't do that. Make sure you're also keeping track of all of your actual hours if you're going to use the fixed rate method, because the ATO now have the expectation that you actually keep track of all of them, not just an estimate. So that's something to keep in mind. And of course, make sure you're comparing the two methods to see which one works best for you. You also want to be careful of the ATO auditing particular companies. They might audit a big company and find out none of their employees work from home. And therefore, if you're claiming home office expenses and you work for that employer, it could be a red flag. And the final one is motor vehicle expenses if you're using the cents per kilometre method. A bit like what I've just talked about with the fixed rate method from home office. The motor vehicle cents per kilometre method includes everything, so you can't then on-claim other things. So for instance, if you're claiming under the cents per kilometre method, you can't then claim servicing on your car. And this is a really common misconception. I get a lot of clients say, oh yeah, but I also want to claim my tyres and my repairs and my fuel. But those things are included under the cents per kilometre method. It's why if you're wanting to claim those particular items, you need to do a logbook and use the logbook method. The great thing is you can compare these two methods and go with which one works best for you. In other words, which one gives you the higher claim. So just be careful that if you're using any type of rate in your tax return that is inclusive of things, then you're not also claiming those other things, because it's just a massive red flag for the ATO because they can easily pick these things up. If you're wanting to know more about potential deductions, in this upcoming video, I'll go through 20 common items that people think are claimable, and I'll tell you whether they actually are. I thank you for watching this one, and I hope to see you over there.